Retail's taken a bigger share, according to one of the trading desks I speak to, one of the sales traders there who sees the flow, said, we reckon retail's doing over 20% of the volume right now. And they don't have to sell. That's the big difference.
They just sit on it.
Well, not only do they can sit on it, but it's not their job on the line, right? So if their size of position, if they get it wrong and want to change their mind, click. They can sell, takes 10 seconds, less. Now, you're an institution, you own 5 million shares of, I don't know, let's say United Health. Big disaster institutional owned stock. It's taken months for everybody to get out of that. It's gone down and down and down. Retail investor would say, don't like that, gone. So they are fearless because they can change their mind and exit quickly. The institution can't do that.
It's an interesting time, isn't it, Julian, for the markets? You know, half of the people that we speak to all saying, Ange, when is this correction? When is this summer correction? Or has seasonality been thrown out of the window?
Yeah, well, I think you've got it there. The usual seasonality, which often sees a correction August, September, we're not through there, so it could still happen. But what we don't normally have is a 20% decline in the S&P from mid-February to mid-April.
Yes.
So this year was rather different.
Tariff tantrum.
Tariff tantrum, nobody was ready for that. Everyone was overweight in February, and they moved to underweight by April. So the earnings season we've just been through was set so low after April, and everybody's saying, can't give guidance, don't know what's going to happen, so they had a free pass. So there's been no disappointments, no reason for the market to go down.
Taking a look at the US 500, which is, of course, the S&P 500 here, you know, we're still looking at 6462 there and creeping higher, you know, green bars outnumbering the red bars there.
Technical trading says that's going higher. There's nothing there saying, and every dip has been bought. You can see down the bottom of the chart there that there's all the volume, big, heavy volume selling. And then we've crept up. And this, of course, is the worry slightly, is that it's very thin out there. August is traditionally thin. But what's interesting is that retail is now making up a larger percentage of the market than I think it has done for some time.
You know, what happens in a market when retail's coming in? We're trying to find this number. I know you've got this, especially for us, because I called you yesterday. Julian, please get this for our trader friends here. Because all the apps as well, you know, we're laughing about this, but it's actually not a joke. And we've seen this in the US. You might as well take away the sell button. Everyone's just going buy, right, on their apps with the fancy colors. Also, passive investing is growing.
Passive investing has been growing for decades. I mean, literally 2 decades now. Passive investors probably control about 40% of the market. But it's now reckoned that retail's got about 20.
And where is this figure that's 20%?
Well, you know, it's open to question. You can only base that on the amount of money in places like Robinhood, places like Schwab, these retail accounts. These accounts will trade on margin as well. So it means that during August, when most institutional fund managers are sort of quietly away in, I don't know, the Hamptons or wherever else they're going to be, retail's taken a bigger share, according to one of the trading desks I speak to, one of the sales traders there who sees the flow, said, we reckon retail's doing over 20% of the volume right now. And they don't have to sell. That's the big difference.
They just sit on it.
Well, not only do they can sit on it, but it's not their job on the line, right? So if their size of position, if they get it wrong and want to change their mind, click. They can sell, takes 10 seconds, less. Now, you're an institution, you own 5 million shares of, I don't know, let's say United Health. Big disaster institutional owned stock. It's taken months for everybody to get out of that. It's gone down and down and down. Retail investor would say, don't like that, gone. So they are fearless because they can change their mind and exit quickly. The institution can't do that.
So how do we navigate these, you know, markets? Because clearly, if seasonality is out of the window, things are not progressing as they should. We've got Trump tweeting left, right, and center.
Trump has made this market more of a day-by-day sort of almost game show. But the problem is that he's a bit like the little boy who cried wolf. He frightened everybody in April absolutely scared the bejesus out of everybody with these tariff numbers. But of course, we now know that that's nonsense. It's not happening.
Taco.
They were taco. Now, he could turn around, and all commentators have said that the deal he got with the EU was definitely in America's favor. So he could turn around and say, well, have I been so stupid? And is it playing to his political support? Yes. The whole idea of what's coming will be down the line. It's too early to know.
Neil and Andrew McKilvey chiming in there on the chat right here. This is great because we're going to get Julian first time in the studio, and he is going to answer Andrew. So I know you can talk about that.
Oh, there we go.
Are you shorting the US market? And if so,
I do short stocks. I see he's picked up Palantir and Nvidia. Palantir is the most expensive stock in the market, but it's also doing incredibly well. And I would say, no, I'm definitely not shorting Palantir. Very simple reason. It was the same question we were asked about Tesla a few years ago. Tesla was crazily, stupidly overpriced, and Palantir probably is as well, but it's doing well. They haven't disappointed. They put up better earnings than expectations, so they have not disappointed. So the stock goes higher.
And
it's a big retail name. It's a big retail name as well. And the retailers are not going to be shaken out. Guess what? So's Tesla. Big retail name. Tesla is a short, fundamentally, under any scenario you like, apart from it's a cult retail stock. So there are much better things to short.
Yeah.
But I do short, yes. But not Nvidia either. Nvidia is the leader. It's not actually that expensive. That's the thing. You want something that's actually going wrong, getting worse. That's a short.
Yeah. And Nvidia also a household name now.
Well, household name. It's not as heavily retail owned, so it's a big institutional name. But it's the world leader in what it does. Why short world leaders? There are really a lot of bad companies out there to short.
Talked about Palantir, about how it is, expensive, but it's still good at what it does. You like another one, don't you? You like another, I think we talked about this yesterday, Cloudflare.
Oh, yes. Okay, so Cloudflare, if you put it on a Palantir valuation metric, is incredibly cheap. It trades for less than half of Palantir. Cloudflare is far less known, but it's creeping up there. It's doubled it's doubled off the April.
So to say, this is a really nice chart from a technical point of view.
Now look, that is a harem scarum name. That is a trader's stock, as you can see. When the market comes down, it will get clocked. But they have performed and performed and performed. And if you take that chart back far enough, you'll see that it's now gone through its 2021 high, which is a bit of a key. It went right down. There you go. That's the peak of the market then. So it's on the verge. No, that's 220. It's on the verge of going through there. Cloudflare is, I call it the fourth cloud. So you've got Amazon, Microsoft, and Google. Cloudflare is number 4. But significantly, it was engineered and architected differently. So without going into too much detail, it's a more efficient mousetrap. It does compute, it's infrastructure, it's storage, but it's just more efficient. If you consider that Microsoft now said they have 75 billion worth of cloud revenue, Azure revenue. Now, we can't work out which bit's what, they're not going to tell us everything. The 75 billion. So Cloudflare's revenue at the moment is 2 billion. All they have to start doing is taking share and pieces. They don't have to win business from Amazon or Microsoft. They just take a piece of it, of a massively growing market. I see that share going a lot higher. Oh, and what's more, at 70 billion, it's one of the largest companies not in the S&P 500.
Love it.
One day.
When it gets added.
That's a little Brucey bonus. That's that'll happen sometime. But we don't, I'm not saying buy it for that reason. But it's a great company. Great company.
The other space that I really like, GLP-1, but Novo has been hit recently because of, competition. And also talked about, having to cut costs. We've got all these, pill versions coming on. Interestingly enough, I found out that the Japanese, had to be the Japanese, had the pill version years and years and years ago. But they don't really need it as a nation, do they?
No, they probably don't.
But Novo and Eli, very interesting to me because I have both.
Okay. Well, I prefer Eli to Novo for the simple reason that it is not just a one-trick pony. With apologies to Novo, but they will They are living and dying on the back of GLP-1s. Lilly has a whole load of other things as well, by the way. It has a very, very good cancer drug coming through called Verzencio. It has all sorts of things. Lilly's had a nice sell-off, there you go, which would say I would put it in the buy zone now. The reason for that last sell-off was that they have an oral pill that they're trying to bring through, which has a...
Give us the name because I can't pronounce it.
It's really difficult. It's called orforglipron. They produced the results. It works. It just wasn't any better than anything they've got. So it's like, what have you done for me lately? What that means is that's opened the door for another small cap, which I also own and have told clients to buy, which has had a huge move just on the back of this Lilly. It's called Viking.
Right, Viking Therapeutics. Yes.
VKTX. It is, now look, this is harem scarum stuff, but you can see basically that move in the last week was from the day Lilly announced that its drug hadn't done so well. So that's a move from 32 to 40. So we've had a 20% move in the last week. Now, like all early stage biotechs, this company is burning money like crazy. But if they're in phase 3 of this oral version of a GLP-1, if it works, that company won't be around for long. It will be snapped up by somebody. And it's a market cap of about 3 billion, 2.5, 3 billion. So it's tiny.
Right.
Someone like Glaxo, who's got large war chests.
Yeah, AstraZeneca.
All these companies got plenty of cash, not much in their pipeline. Someone will buy Viking if this thing works. So, you know, it's a bit of a Hail Mary, but they are in the right space. Pelican's asking about CoreWeave.
Yes.
I don't like CoreWeave. I don't like CoreWeave because it's crazy expensive. Its business is all tied up with OpenAI. The trouble with CoreWeave is it's owned by Nvidia. It makes loans to Nvidia. It's almost like a channel for Nvidia. I don't get CoreWeave. Now, you know, very clever you if you paid 50 and you went to 150. Interestingly, I can't even short it. So it must be heavily shorted. As in, my machine said, you cannot short this stock.
Computer says no.
Computer says no, which is actually quite interesting because when something can't be shorted, that means probably too many people are short. If people are short, you don't want to be. So, but I don't fundamentally see why I want to own CoreWeave. I think there are some fairly other hairy, scary stocks that are slightly more transparent.
Yes. And if you're going to go on a play that is effectively a play on Nvidia, it might as well be in Nvidia.
Well, Nvidia is not expensive. I mean, it really isn't expensive. It's much more. You've got to remember, Nvidia's done pretty much nothing for the last 14 months. And it got to 150 last July, and we're at 180 today. You know, in stock terms, that's really not a lot.
And I don't think it's expensive given they've gone from talking about petaflops to exflops. So
I mean, you know, that the AI train is continuing.
Yes.
The gating factor, if anything, you mentioned energy, will be power.
Yes.
Right? If there is a disaster out there, it's that the electricity demand.
Yes.
We have a choke point.
There you go. That is my theory precisely with the electricity play. Speaking of which, you know, key week as well. We're seeing this slight, almost like the start of Julian, this rotation back into, you know, consumer discretionary.
That's right.
Right, from tech. Is this going to be a good time to rotate into those, you know, consumer names like your Walmarts, your Home Depots, your, you know, I know you have issues with Amazon.
Well, I do have slight issues with Amazon because I think they're doing something from defense. They announced yesterday they're now going to do home delivery of groceries. If you're a Prime member, you can now have delivery, same day delivery. Well, obviously, the market initially went, oh, that's good. And they took Amazon up a little bit yesterday. What they really did was they smashed the competitors. So Kroger went down a lot. The ones that really got hit were the delivery companies, which frankly is a business that I think is pretty rubbish anyway. You know, afraid to say. So Instacart, DoorDash, Uber, you know, Uber, obviously Uber's wider, got a bigger set. But so Instacart got the biggest hit. If Amazon's going to do home deliveries, that's going to cost them. It's not good for UPS either. It's not good for FedEx. It's going to be more of their delivery. So it's a big change. These are my instant, because it was only announced yesterday. But Amazon seems to be losing share in the cloud business. It's not growing as fast as the others. Google, Microsoft all put up much better numbers this quarter than Amazon did.
It would
and
also,
Walmart's back
yes.
in retail. We'll get more from Walmart. You asked about this correction. We didn't get a correction because what we've had is the tech earnings. Tech earnings are great. Walmart will give us more of a clue about the consumer next week.
Fantastic. And just taking a look at Walmart as well to see whether there was a reaction after the Amazon news. The reason why I'm interested is because when I'm in the States, I do take time to go to all these places. I never buy anything. I'm just stood there watching. I know it sounds strange, right? Maybe trainers. Trainers are really cheap there. So I'm wearing a pair of trainers that I picked. I always pick up about 3 pairs because it's just so cheap there, right?
Yep.
Your Targets, your
Used to be. Getting better now. Our pound actually buys something now.
Well, it's more like the dollar is
Well, the dollar's gone down, so now 135. It becomes a bit more.
Yeah, so I come back with minimum 3 pairs of trainers because it's cheap there. But what's
There's
interesting?
Walmart yesterday, that red bar.
Yeah, and that makes sense because Walmart. Have you heard about their premium delivery services? I can't imagine anything more horrific because there are more options than I thought possible. One is you pay an amount for them to bring it to your house. Then there's another more expensive option where they get some smart fob, so they put it in your garage or your garage, as they say there. Then there's an even more expensive option where they bring it into your house and they put it in your fridge or where you...
You know what's coming next.
There's one more, and I just thought, how lazy can you be, people? How lazy can you be? They arrange it on your worktop.
Oh.
And if you can't tell them where to put it, they just lay it out so you know where everything is.
Very nice. Oh, they're going to deliver it. The next thing is, that's going to be a big business. I haven't worked out the exact play on it yet. Drones.
So they put it in your garden or just drop it.
The drone will arrive. You'll hover above. This could be in, slightly rural America, where everyone has a yard or garden, whatever. So the thing won't go in your house, but it won't have to. But it will be able to leave it. It'll sort of come down. The drone will hover above the garden, and then it will just come down on like a little parachute. Drop it down, and then you'll be there to take it. And if you're not there to take it, it'll just drop the thing outside.